What can you actually build with $50 a week in crypto? It's a question that seems almost too small to ask in a world of wild price swings and overnight millionaires. But what if consistent small steps could lead to a significant outcome without the high-stakes gambling? I wanted a real, data-backed answer. So, I ran the numbers through an AI model, feeding it over a decade of historic market data, calculating compound projections, and modeling realistic scenarios. The goal wasn't to find a lottery ticket, but to see what a disciplined, patient approach could yield. The 10-year result genuinely surprised me, and the system to get there, it takes less than 15 minutes a week to manage. This video is for the person who thinks they don't have enough money to meaningfully invest in crypto. I'm here to show you that $50 is enough. Here's the proof, and here is the exact system. First, let's set the stage. Why does this work? The strategy is called dollar cost averaging, or DCA. It's simple. You invest a fixed amount of money at regular intervals, regardless of the price. When prices are high, you buy less. When they're low, you buy more. This approach smooths out the terrifying volatility of crypto and removes the emotional guesswork of trying to time the market. It turns volatility from your enemy into your ally. A quick but important disclaimer. I am not a financial advisor. And this is not financial advice. All investing carries risk, and past performance is no guarantee of future results. Always do your own research. Now for the math. $50 a week is $2,600 a year. Over 10 years, your total contribution is $26,000. But what could it grow to? Based on historical crypto market data, I modeled 3 scenarios. A conservative case, with an 8% average annual growth, could turn your $26,000 into roughly $39,000. Our base case, using a more typical 15% growth rate, projects a portfolio worth around $56,000. And a stretch goal, reflecting periods of high growth at 25%, could result in over $95,000. These numbers are hypothetical, but they demonstrate the power of consistent compounding. So, how do you execute this? The key is automation. You'll need an account on a reputable crypto exchange that offers a recurring buy, or auto-invest feature. You set it once, $50 every week on the same day. This is the core of the system. Set it and forget it. To track your progress, I recommend a portfolio aggregator like CoinStats. It connects to your exchanges and gives you a single, clear view of your entire portfolio's performance, which is crucial for our 15-minute weekly check-in. And please, enable two-factor authentication, or 2FA, on every account. It's your first and best line of defense. This brings us to the weekly 15-minute management routine. Once your auto-invest is running, your weekly task is simple. First, open your portfolio tracker. Don't fixate on the dollar value. Look at the trend. Are you generally on track with your goals? Second, spend 5 minutes reading the top 2 or 3 headlines on a trusted crypto news site. You're not looking for trading signals, just staying aware of major market events. Finally, write 1 sentence in a journal. Market is down 10% this week, but the plan is working. Or, market is up 20%, feeling good, but sticking to the plan. This practice builds emotional discipline. What should you buy? A sensible approach is a core satellite portfolio. Your core, making up about 70% of your investment, should be in the most established assets, Bitcoin and Ethereum. They are the bedrock of the crypto market. The other 30% is your satellite. This is where you can explore higher risk, higher reward areas that interest you, like AI, blockchain gaming, or DeFi projects. Your weekly reading will help you identify these trends. The rule is simple. The core is for stability, the satellite is for growth potential. As your portfolio grows, security becomes paramount. While keeping coins on a major exchange is convenient for starting, once your holdings become significant, say over $5,000, you should learn about self-custody with a hardware wallet. This device keeps your crypto offline, away from hackers. It's like your own personal vault. Also, be relentlessly skeptical of unsolicited emails and direct messages. Phishing scams are rampant. Never, ever share your passwords or seed phrases. This entire strategy is designed to be simple, sustainable, and effective over the long term. It's not about getting rich quick. It's about building wealth systematically. By automating your investment, managing your emotions with a weekly check-in, and maintaining a balanced portfolio, you create a powerful engine for growth. You don't need a fortune to start. You just need a plan. The math, $50 per week is $2,600 per year. If Bitcoin's average annual return over the next 10 years matches its historical 10-year average, conservative estimate, $2,600 invested annually becomes approximately $85,000 after 10 years. That's not guaranteed. Markets can always underperform. But historical DCA data is on your side. Now, let's operationalize this strategy. This is the 15-minute weekly system. It's not about timing the market perfectly. It's about creating a disciplined, low-stress process that you can execute consistently, week after week. This entire framework is designed to fit into the quiet moments of your week, demanding just a few minutes at a time. Let's walk through what that looks like day by day. We start on Monday with a quick market pulse check. Your goal here is simple: get a high-level sense of the market's mood. Open your portfolio tracker like CoinStats and look at the AI-generated summary. Is the overall sentiment bullish, bearish, or neutral? Are there any major market-moving headlines? For example, is there news about significant regulatory changes, a major protocol hack, or a macroeconomic event that's causing unusual volatility? You're not looking for a reason to act, you're building context. If the summary says, markets are consolidating after last week's gains, and you see no glaring red flags, you simply note it and move on. This takes less than 5 minutes. Tuesday is the easiest day of the week. It's automation day. Your pre-scheduled auto-invest order executes. That $50 is automatically deployed into your chosen portfolio split, for instance, $40 into your core Bitcoin and Ethereum holdings and $10 into your speculative sleeve. The beauty of this step is that it requires zero action from you. It happens in the background, ensuring you're consistently buying, regardless of whether the market is up or down. This removes emotion from the equation and is the cornerstone of the dollar-cost averaging strategy. Wednesday is your strategic check-in. This is where you leverage AI to challenge your own thinking. You'll run a weekly check-in prompt with an assistant like ChatGPT. Don't just ask a generic question. Be specific. Start by feeding it the context you gathered on Monday. For example, the crypto market this week seems to be experiencing low volatility and sideways trading. Given this, and my goal of long-term accumulation via a $50 weekly DCA strategy, are there any arguments for or against slightly adjusting my approach this week? Please consider both bullish and bearish perspectives, but maintain a risk-averse framework. This prompt forces the AI to provide a balanced view, acting as a neutral sounding board. It helps you avoid confirmation bias and consider angles you might have missed. The goal isn't to get a direct command, but to refine your own judgment over time. Thursday is another do-nothing day. Let the market breathe. Let your strategy work. No checking, no tinkering. Finally, Friday is for review and reflection. Take 5 minutes to look at the alerts you've set up. Did any of your price alerts trigger? Perhaps Bitcoin crossed a key threshold you were watching, or your speculative asset dropped by 15%. Did any significant news alerts come through? If an alert did trigger, your job is to assess, not to panic. Ask yourself, does this event change the fundamental long-term thesis for my investment? A sudden 10% dip is often just noise in the crypto market. In most cases, the answer will be no, and you simply acknowledge the alert and stick to the plan. If, however, a major game-changing event occurred, like a fundamental flaw discovered in a protocol you're invested in, that might warrant a decision to sell or pause future investment in that specific asset. But these instances are rare. And that's it. You've navigated a full week with a clear, repeatable system in just about 15 minutes total. Now, let's construct the engine of our system, the portfolio. The strategy we're building is designed for resilience and long-term growth, not for chasing short-term hype. We'll use a classic core satellite approach. Think of it as 90% of your capital building a strong, stable foundation, while 10% is allocated to carefully selected, higher-risk opportunities for potential outsized growth. This structure is key to sleeping well at night while still participating in crypto's innovation. Remember, this is a framework, not rigid financial advice. It's a starting point designed to be adapted to your own research and risk tolerance over time. For our $50 weekly investment, the allocation is simple and powerful. First, the core, $30 or 60% of our weekly capital, goes into Bitcoin. Bitcoin is our anchor. It's the market's oldest and most established asset, often seen as a digital store of value. Its primary role in our portfolio is to provide a base layer of stability and capture the broad, long-term growth of the digital asset class. Next, $15, or 30%, goes into Ethereum. If Bitcoin is digital gold, Ethereum is the decentralized internet's foundational software layer. It powers smart contracts, decentralized finance, and NFTs. This allocation gives us exposure to the vast, innovative ecosystem being built on top of blockchain technology, offering a different, utility-driven growth vector. The final $5, our 10% satellite position, is for speculation. This is where we take calculated risks. For this system, we'll focus on a specific narrative, such as AI-related tokens. The rule is to select one token from this category and stick with it for a full quarter. At the end of 3 months, you'll use your weekly research time to reevaluate. Does the project still have momentum? Has the narrative shifted? Based on your analysis, you can either stick with it or rotate into a new project within that same AI theme. This disciplined approach prevents chasing every shiny new object and forces a structured review process. As your portfolio grows, your strategy will evolve. Once your total balance crosses the $5,000 milestone, it's time to introduce a new layer, staking. You can begin by allocating a small portion of your Ethereum holdings to a staking service, either directly on-chain or through a trusted platform. This allows your assets to start generating a yield, essentially earning interest and compounding your growth. Start small, understand the lockup periods, and only use platforms you've thoroughly researched. The next critical milestone is at the $10,000 mark. At this level, security becomes paramount. It's time to invest in a hardware wallet. This is a physical device that keeps your crypto keys offline, making them immune to online hacks. You'll move the majority of your Bitcoin and Ethereum, your long-term core holdings, off the exchange and into your own custody. This is a fundamental step in taking true ownership of your assets and mitigating platform risk. Think of it as moving your savings from a wallet you carry around to a personal vault. This entire structure, the disciplined weekly buys, the core satellite allocation, the quarterly reviews, and the security upgrades, is what separates a systematic approach from pure speculation. We are not gambling, we are building a machine. It's a machine fueled by consistency and designed to navigate the volatile crypto markets with a clear, calm, and repeatable plan. This is how you build wealth over the long term. I've written out the full 50-week system as a free one-page guide, link in description. This is the actual system I'd build if I were starting from zero today. Subscribe and tell me, how much are you investing per week right now?